Going live. The Hangout on Air is live. Good morning. Welcome to the schoolofbookkeeping.com Friday morning hangout. Welcome. Flex those muscles. Let's get stretched. Take a deep breath. Some of us on the West Coast are still just waking up. Those of you over on the East Coast are thinking about lunch by now. And we have a very special guest today, which we're going to get to in a couple of minutes. Interesting conversation we were having before we went live because I just got back from ZeroCon in Denver, where marijuana is legal. So we have a niche industry, which some people are specializing in, and there's lots of interesting dynamics about handling the books for a firm like that. So, of course, you know, the other question is, my understanding is that while the states are legalizing it, it's still not legal at the federal level. So I'm curious to know from an accounting standpoint how you deal with that part of it. Dennis, what do you know about that? You're in Seattle, where it's also legal there now, right?
Right. Yeah, I know. I had a potential client which I decided not to engage with, but basically, they can't open up a bank account, and so it's a cash-based business. They can't deduct. They can only deduct cost of goods sold. I don't think they can deduct their other admin expenses. I know that one of my accounting groups is putting on a seminar. They're getting together the state of Washington and I think some banking officials to try to. I heard talk maybe they're going to try to set up a special bank account. Right now, it's really kind of cumbersome that you can't open up a bank account because of the feds.
Oop, Dennis, I think we lost your audio at the last leg of that. So I'm guessing it's probably difficult for businesses like this to get loans from banks for their business, right? Which is unfortunate because today's guest and today's topic is going to be based on how you can get banks to compete for you to get your business so that you can get loans for your business. And this is especially important for us as accountants because we really want to be able to be in that position to be able to guide and advise our clients on how to get funding for your business to cover your working capital needs. There's lots of different ways of doing it out there, obviously. And I think that Meredith, who we're about to introduce, and Fundera has a really interesting solution here that will really empower you or your clients to be able to get the working capital needs that you have met in a way that's very unique and very powerful. So with that, I'm going to bring you on. Meredith, good morning. Welcome. Thank you so much for taking the time to be here.
Absolutely. Thank you so much for having me.
And so first question I have, and this is going to be probably a bit of a curveball because it doesn't have much to do with the business at large, but I'm curious about your title with the company, Editor-in-Chief. That makes me think of some kind of a publication, which, unless I missed something, you are not.
That is I actually love that question. It is a curveball. So that is my title because primarily I'm running up the sort of education department at Fundera. So we have a business blog that does very well. But we also write externally for a lot of other publications like Inc. and Entrepreneur and Forbes, and since that's such a backbone of our business, we try to treat it like we are a publication and that we're unbiased in providing this advice. And as we go further into our business model, you'll see that we're all about educating the borrower from end to end, and so that's why we kind of decided to go that route with the title specifically to kind of highlight what we believe is one of the most core components of our business, which is the education part.
I love that. I love that you're taking the educational approach as sort of a backdoor way of people getting into what you do at the core. Teaching people about the loan business in order to help them understand it better so that when the time comes for them to look for getting funding for loans, they know who to come to. In other words, you crowdsource by bringing people in based on teaching them something rather than trying to sell them something. And that's, of course, how I built Nerd Enterprises, was on that very same foundation. I'm going to go out there and teach people about bookkeeping and how to keep a good set of books. And based on that, people, of course, are going to ask me for help and want to hire me at some point. But that's not the primary focus of my so-called marketing effort. I absolutely love that.
Awesome. Yeah, I was on the phone with a customer yesterday doing a case study, and they said something to me that was really powerful. They had all these lenders call them, and it was like everyone was trying to sell me something. But when I got on the phone with you guys, your question was, how can we help you, and how can we walk you through this process and give you an understanding of how it works? And he was like, that was just like a totally different tone. But I think from a small business owner's perspective, it's so much more inviting, and it's really they need to sort of understand these things before they even consider, taking on debt, which is such a huge decision for a business.
I wish the mortgage lending industry would take a page from your book. And it's true because it's so true. I mean, it's in my experience, and of course this is strictly my opinion, but in the mortgage lending industry, it seems that even today, even with everything that's happened, they still try and shove their loans down your throat rather than educating you about them. It's almost like they don't want you to understand them, because the reality is, if you did understand them, you'd probably never engage in that kind of a loan agreement. You just rent instead of buying a home. So. Yeah. Anyway, with that in mind, then, and I do want to definitely have you demonstrate the Fundera product, but before we do that, and since this came up, can you kind of give us a high-level overview of the kind of stuff you teach people when it comes to educating them about loans, and what do I need to know as an accountant, for example, servicing my clients about working capital loans? And I mean, there's factoring, there's I can go to the bank, I can apply for a line of credit, and my understanding is that what you guys do is you aggregate a lot of different sources to try and find somebody the best possible sort of deal on a loan. But so what do I need to know about loans before I even talk to you about actually getting one?
Absolutely. So I think that it's a lot about being very introspective, in the sense that the first question we always would ask a business is, are you bankable or not? And something important to know right now is that after the recession, banks regulation is way up, and they've had to increase. Do you guys hear that echo? Is it me?
I don't hear an echo. Does anybody else?
Are we good? Okay. I think I'm good to go.
Yeah,
okay.
Everybody's muted now, so that's probably...
Oh, awesome. So with the regulation tightening, as we all know, small businesses are inherently riskier than larger businesses. So they've had to kind of diminish the amount of small business loans in their portfolio. Secondarily, for a bank to underwrite $1 million loan is just as expensive to underwrite a $10,000 loan. So for many of these banks, it's absolutely not profitable for them to do these smaller loans. So small businesses are finding that it's not cyclical. It's actually just getting harder and harder and harder to get a bank loan. In fact, right now, 82% of small business loan applications are denied. That being said, if you can get a loan or a line of credit from the bank, you should. But the question is, obviously, a ton of man-hours go into preparing a bank application. They're by far the most complex. And so I think it's being able to look at yourself and kind of understanding what your chances are. If you've got a strong personal credit score, which is oddly enough, one of the biggest parts of a business loan application, so we're talking over 700, you want to be up there. You want to have strong revenues, way over 6 figures, and be profitable. And you want to be able to bring some assets to the table, whether that's in your business, if you happen to run a business that has a lot of inventory, has a lot of equipment, or you personally have, let's say you own a lot of real estate or something like that. But if you know that you have financial weaknesses, you know you've had a recent bankruptcy, you know that you have a tax lien out on your business, you maybe have another loan out with another lender, you maybe are struggling with your credit score. If any of these things are true, you're going to have a very hard time getting a loan from a bank. And so that's sort of the first sort of, I guess, content we provide is kind of gearing towards, are you bankable or are you not? And then if you're not bankable, you want to, your next option is this online lending industry, which is very new, and it's very hard to approach it and be like, okay, where do I start? Who are the best lenders? Where am I going to get the best customer service? Where am I going to get the best rates? What's the best product for me? And so there's a huge opportunity for education there in introducing this industry. What are the pros? What are the cons? What are their different products? And within those products, what are the rates? Who are the different lenders? And where can you find more information about them? What are their pros? What are their cons? What is it like to complete an application with them? Does it take a few hours? Is it going to take days? And so we try to make all that information readily accessible to the borrower so that they feel that they can kind of figure out everything they need to know. We also like to provide warnings, I guess, for things to look for in offers and term sheets. So things like, are there prepayment penalties, fees that would change the APR on a product, because a lot of people just look at the interest rate. And I think that that's where sort of the role of an accounting professional comes in, is that, one, you can help your clients self-diagnose, are they bankable or should they consider the online route? And you can also help them decide where to start their loan application, what loan products to consider. You can help them decide the amount of debt that they should take on. and you can help them sort of look at when the time comes, if they do receive term sheets, help them identify those things like prepayment penalties, like potential origination fees that could totally change the cost of the loan, and sort of give them that overview perspective of what really is best for their business.
Okay, so let me stop you there for a second because I have a couple of important questions and something I want to underscore based on what you've said so far. First, really important question, Meredith, what is your Twitter handle?
It is MERE _ WOOD. What do you call that thing?
Found you. Okay, perfect. I just want to make sure the world knows that we're here live talking about this on Twitter right now. Now, the second thing is, because I was trying to find you, and I know we're connected on Twitter, but it wasn't coming up. Now I've got you. So the other thing is, so what you started off talking about was how to be bankable, right? And I was starting to feel a little hopeless for some people's sake, because if you're not bankable, right, if you don't meet some of the criteria that you were describing, I'm thinking, okay, are we screwed? And then you kind of gave us the answer, which is no, we're not screwed, but that means we have to go to these online lending sources, right? Mm-hmm. Now, the question I have is, are we in the bigger picture, in your opinion, or based on your experience, I should say, moving in a direction where maybe your credit score will be less meaningful and other kinds of information we can get about somebody will become meaningful? For example, and I'm seeing this more and more with some of these online applications where we can look into a company's accounting file and see, are they paying their rent on time? Do they pay their utilities? And using that kind of information as what I would venture to say is maybe even a better gauge of somebody's creditworthiness than what you're getting when you look at a FICO score.
Mm-hmm. That's actually, I love that question because I think that right now online lending is still in its infancy, and it's very much over time going to be the norm. And I think one of those success metrics of the industry will depend on their ability to look beyond the credit score. And so a lot of these people, when they're underwriting, they're using things like social media. They're logging onto Yelp. We had a specific incident where the lender looked at someone's Yelp reviews and saw that at the time that person had taken over the restaurant, their reviews plummeted, and that made the lender nervous, as it should, because it shows like how's this person managing, customers aren't happy, even though maybe the history of the business is strong. So I think that's one benefit is kind of taking in elements that were never even considered in the first place. And then I think the second part is that you touched on is the speed of application is going to change because they're going to be able to hook up their QuickBooks, their Zero account, streamline that information, and get all the reports. And even more so, something we're trying to develop, and I hope the industry to see is, let's say that you're a younger company and you're not quite yet able to qualify for a loan, but we can monitor your QuickBooks and let you know when you meet the benchmarks that you need to qualify. So a certain revenue point, a certain profitability point. So it's kind of proactive approach to financing. And then I think the last part is other things like the Intuit account aggregation, which lets people easily look into bank accounts and things like that. I think the entire process of applying for a loan is going to be so much less of a headache in about 5 to 10 years.
It's so amazing because especially coming off the heels of ZeroCon, and really based on that, I've been the last few days really thinking more and more about the direction of mobile and the influence that that's going to have on how we do business. And as you were describing that, I got this image of like a small business owner driving in their car on their way somewhere to meet a client or a supplier, let's say, whatever it is, and all of a sudden they get somewhere and they get a notification on their mobile phone based on what you just described, let's say, that says, hey, you just, based on the last review that we just pulled a data feed 5 minutes ago, you now qualify potentially for a loan that you didn't qualify for before, and tap here if you'd like to apply. And in one tap, the information then gets sent to the lender or the group of lenders that potentially could be making this loan, and all of a sudden now they get out maybe an hour later from their meeting and they're that much closer, if not by then approved for a loan. I mean, is that kind of what you see in the future?
Absolutely. I especially think about the fact with millennials moving up in the workforce, and they're going to own probably 50% of small businesses in the next 5 to 10 years. They're so accustomed to thinking like that. They'll give their information. They're less hesitant. But that's exactly how I see it. And I think you think about what technology has done to so many other industries. Obviously, banking is going to be a little bit harder to disrupt, but it's definitely headed in that direction. And hopefully banks get on board, but if they don't, I think they'll be left behind.
Yeah, in fact, it's funny you mentioned that because, again, just having been in Denver, they have, I'm trying to remember what it was called, but they have like their own kind of funny currency that's accepted mostly by local businesses there. And I think it's a sort of play at trying to disrupt the banking industry, at least locally there, and say, hey, don't keep your money with the big banks. Let's keep it here locally. And they have, I can't forget what it was called, but it was something bucks. It was some kind of bucks that you could carry as currency and it's accepted in stores. So I think that's a sign of how people would love, I think, nothing more than to be able to disrupt the banking industry.
I forget what it was. There was some survey done with millennials of like brands that they dislike the most, and I think like the top 3 or something were banks.
Right. Billy's asking for Bitcoin. No, Bitcoin is something else. Bitcoin actually still scares me, frankly, because I feel like it's still like commodities trading almost. You don't know what's going to happen to the value of your Bitcoin from one day to the next. You could lose money on it. So I don't feel safe putting my money into something like Bitcoin at this stage because I just feel like it's an unknown. I really don't feel comfortable with what backs it, right? At least with my American dollar, it's backed by the full faith and credit of our country, which maybe that could be called into question. I don't know. But at least for now, I feel like my $10 is going to get me $10 worth of goods, whatever that means today. So I'm fascinated by the way this is all going, especially with mobile technology. I think more and more mobile is going to play, you know, it already plays an important role in how we do business. It's going to play an even more important role. And I'm blown away when I think about the speed at which information is going to be able to be transferred and the speed at which deals are going to get locked in based on, rather than having to fill out a whole loan application, the information is already there and available through feeds. All I've got to do is tap a button and say, yeah, go ahead and send my application out. You know, go do what you have to do to get me approved for a loan and let me know. And the processing speed. I was reading an article online on my flight back yesterday, actually, talking about how a lot of borrowers complain about the lending process and how long it takes and how excruciating it can be with the banks. And then the banking side, they come back and say a lot of times it's the potential borrower's own fault because they're really not doing it right. They're not making. They're submitting older financials and you know, outdated, or they're not submitting all the information that requested. So I imagine that what you're talking about, Meredith, the way it's going to simplify things, among other ways, is that the information is just going to be there to be pulled from the feed, and all you're going to have to do is give your approval to pull it, and then the banks are going to have exactly what they need. There's not going to be all this back and forth. Is that accurate?
Absolutely. I mean, of course, the only potential you run in there is if people haven't been managing their books properly, but that's a whole other issue. But they have a lot of verification steps. Like, you know, most lenders are going to want to see your tax returns to verify revenue and that sort of thing. So they have different metrics that they're going to look in to make sure everything is the same number.
Right. Okay, so you know what? Maybe this is a good time then for us to get a look at what Fundera actually looks like. If you want to share your screen and show us, and then of course, you know, dig in. And you know what? I'm opening the door, Meredith. Sell me on Fundera.
Love it. Okay. Can you see okay my screen?
I can.
Okay, so before we jump in, because I had a few questions going on in chat that I felt like it might be good to give just a real high-level overview of what Fundera is doing. And to sum it up, we're a marketplace for online loans. So if you decide that the best place for you to find a loan is online, you go through Fundera, and you can submit one application, think of it like a common application, for 25-plus lenders. And we've aggregated the best of the best online. And within those lenders, there's different product types. So we do have SBA loans. We've got lines of credit. We have invoice financing and factoring. So you're also able to apply to different product types and kind of see where are you going to get the best fit for what your financing need is. And the second is going to be, you know, obviously where are you going to get the best rate. So there's the time savings element of it, which every business owner loves to hear. There's the assurance that you have found the most affordable loan for your business. But I think the third thing that although we're a technology company, we have a very strong service department. We have loan consultants that will work with you throughout the entire process to make sure, one, you're entirely clear about what's happening, and most importantly, when you get to the point where you have lenders you pre-qualify with, you're deciding where you want to submit your application, that help you understand what's happening, what documents you need. When you get offers, help you look through those term sheets, identify, you know, what really is the true cost of the loan. So that's Fundera in a nutshell. And I think something that's like, to give you an example of how we're aggregating here, I know like people are probably familiar with like Fundbucks and Bluevine because they're on apps.com. And so those are two of the lenders on our network, along with bigger names you might have heard of, like Lending Club or Funding Circle or On Deck. And I think the last thing right before we jump in, you were kind of saying, Seth, about the speed of the application. And in a lot of ways, speed is very much there now. In fact, our fastest time to funding is 2 hours. Granted, then our average is 2 weeks. And you also touched on something that said that often the speed of the application is dependent on the borrower, and that's very true. Because if we have all your docs and send them through to our lenders, we can hear from them in a matter of hours, or if not days. And then, but for some people, they have to take that break to find their documents, to reach out to their accountant, et cetera, et cetera. And so that's, I think it's so important to have the accountant involved from the very beginning. So to jump into the application, you can get started right here on our homepage by letting us know how much you want. And let's say we want $100,000. We're doing about $1 million a year in revenue. We started our business in May of 2005, and we've got a pretty good credit score. So going right here, we're going to complete the application. And I think something that is important to note right here is that these questions are essentially how we decide, can kind of tell based on the information you provide us where you match. And what happens after you get to the match page, which you'll see, is then we go through the process where we actually have to verify these numbers. So let's say we do expansion. We're based in California. We keep an average bank balance of $10,000. We're a C Corp. We're a restaurant. We're profitable. We don't have a bankruptcy. We're not B2B. And we do process credit cards. We do about, $50,000 a month. Clicking this button, this is where you're going to be able to see, based on the information you provided us, the options you match with. And I'm going to go ahead and create the account because I do want to see my matches. And we have all users created an account on Fundera. That way that if they want to stop a part of the application and come back and complete it at a later time, they're able to do that. So right here, we see that we have matched with 5 different product types: medium-term loan, short-term loan, SBA loan, a line of credit, and a merchant cash advance. So I can see right off the bat where rates are starting. I can also see how long it would take me to get a loan.
Meredith, can I stop you there and ask you a real quick question on that?
Yeah, absolutely.
So, if I choose select all here and I want to apply for all these loans, is my credit going to get dinged 5 times, or how does that work? Because I know that affects the credit score itself.
Yes, that's a great question. So if you select all these lenders, go all the way through, you will have your credit pulled multiple times. But the thing to understand is that credit bureaus are prepared to recognize rate shopping. So if you, whether you're looking for a student loan, a car loan, a mortgage, a business loan, the first time your credit is pulled, the bureau see, okay, they're looking for business credit. And then let's say over the next 2-week period, they see you have 3 or 4 more pulls from business lenders. They quantify that as one pool because they understand that you're rate shopping. Credit bureaus don't want to obviously harm somebody for rate shopping, which is a very savvy thing to do. But you want to make sure you're doing it in about a 2-week period.
Okay, and they're all the same kinds of loans generally. Like if I do this and then I start getting my credit ding for auto loans, that could be a red flag.
Yeah, that would be different. Yeah, a really popular question we get is, I am trying to close on my mortgage. Like, should I apply for a loan now or later or all of that? And we always say wait to close on your mortgage, have that process completed before you start looking for the business loan, mainly because you don't want your mortgage rate to change because at closing they see your credit score has maybe gone down a couple of points. But at this point, this is still pretty early on in the application. Towards the end, you do a credit authorization, and at this point in time, you will have had a conversation most likely with a member of our success team who will have an overview of your business. We'll ask the questions like credit score, revenue, profitability. Do you have any red flags that you're willing to tell us about, like bankruptcies, liens on your business? and kind of give them an idea, like, you know, if they're a totally stellar borrower, we would probably say you should start with the SBA in medium term, and let's go from there, because we know those are the lowest cost loans. Where if someone is very financially rocky, we might say, you know, your best chance of securing a loan is with a short-term loan. So sometimes once we get on the phone with them, their choices will change, and that's okay. And we want that to happen because we want them to understand what's going on.
Right. And what about personal guarantees on these loans? Is that something that typically comes up or is required, or?
It often comes up. I find that there's many different kinds of personal guarantees, and you'll see them in any way, shape, and form, and that's kind of why we like to be there when you get term sheets, so you understand what you're committing to. So some of the loans will have a personal guarantee, and even more so, which I think a lot of people get kind of caught up in language, like someone will tell them, oh, it's an unsecured loan, but it's not really an unsecured loan because they're putting a lien out on your business. So we'll also let you know if that's going to happen, if this is a lender that would put a lien out, which isn't a terrible thing. You know, a lien only is an issue, obviously, if you go bankrupt, but it could prevent you from getting a loan from another lender, but hopefully you're not having to do that anyways, and that would be something that we would coach you through in the first place. So there will be some personal guarantees, depending sort of on the loan product they end up in, as well as the business itself.
Gotcha. Okay.
Do you guys find that people are nervous about personal guarantees?
Well, you know, I think it comes up pretty often. I think, let's put it this way. I've rarely seen somebody apply for a business loan where a personal guarantee wasn't required.
Exactly. It's rare. And I think it's really nerve-wracking to people, but they have to understand that in a lot of ways, signing the personal guarantee is a vote of confidence for the lender, because they're saying, oh, if they're willing to sign to this, then I trust, like, they believe in their business as much as we do. And then in some cases, it's just, I mean, there's less risk than for the lender, of course. So that being said, we also provide some more information about the loan products. You can read what they are, their advantages, their disadvantages, and we also provide some knowledge here. So for this test, I'm just going to apply for a short-term loan, requires the least amount of paperwork. You can see total effort involved, how many questions that you'll be asked to complete the application, and how many documents you'll need. And you see which lenders you're applying with. So at this point, maybe you've read something, let's say, about Merchant Cash Capital, and you're like, oh, I don't want to apply with them. So you can uncheck a lender at any point, and we can also uncheck a lender later for you down the road. So this can also give you an idea if you're like, oh, now I have a medium-term loan. This is how many questions I'll have to answer, and this is how many documents I'll have to do. So sort of giving them insight from the very beginning. So we go ahead, start the application. You know, at any point of time, we do have chat available if you have any questions about what's happening at the application. And then you go through and you answer some probably pretty normal questions you're probably not surprised to see about the business. And these are, we're aggregating the various questions that our lenders need, all of the lenders you're applying to. You don't have a tax lien. And this is an important thing to note. If you're working with clients on this, if they haven't filed their taxes for the year, they're going to want to wait till they do to apply for a loan. Let's say we don't have any outstanding debt. I think that's also an important thing to know. If they currently have a loan out with another lender, it will always be harder for them to get a second loan. But if they're almost paid down on that loan, it'll be much, much easier.
Now, what if they don't have any outstanding debt for their business, but they have personal loans out there?
So lenders are going to want to know that, but that won't be as big of an issue.
Mm-hmm.
It's basically you'll submit a debt schedule, both personally and professionally, and they're just trying to gauge an idea. And it also kind of depends on the structure of your business. So if you're like a sole prop, your personal finances are going to be much more important than if you're a C Corp. But that being said, if you have personal loans, it's not a problem, because the main thing they're looking at there is the lien structure on your business. Because if another lender has a lien out and they're in first position, you know, obviously if your business goes bankrupt, that person's going to get paid first. So that's more what it is. They want to know, if you go bankrupt, all your assets are liquidated, will we get paid first?
Mm-hmm.
So going forward, again, you can see these are just basic questions, nothing out of the ordinary. I own my home. Sorry if some of these numbers are like not real. Let's say we rent our office space. It's $5,000 a month. Oops. And if you guys have questions as I'm going, please let me know.
And I'll check the actual event page on Google Plus to see if we've got any questions there. And for those of you who are watching at home, if you have questions and you're not on the live panel, go ahead and post them right there on the event feed. Mariette has already taken the time to post links to your blog as well as your Twitter.
Aw, thank you.
Mariette is wonderful.
I love her.
She's part of our team SOB, as is Joanne, who is here with us, and as is Billy Ann, who's also here with us. And they actually host our chats every day at 12 noon. I'll just fill in the time here while you're filling out the application.
I love it. I know it's like I'm doing a lot, but when you think about this, how the process used to be. So up here you can see they just ask for 6 months of business bank statements. They do this because they want our lenders want to know how much cash people are keeping on hand. Do they have a lot of NSS? Because they're going to be pooling, obviously, on a cash basis, and so they want to make sure that you do, in fact, keep cash in your business. Most recent business tax return, verify revenue, your P&Ls. For these short-term ones, it looks like it's just year-to-date. Some will require a few years back, same for the balance sheet. And then other, sometimes we have people that like to submit things like their business plan, and at this point, again, you've probably talked to one of our success team members that said, oh, this lender needs to see you know, a signed letter from your landlord or something like that. It just kind of depends on the situation and on the borrower. We'll go ahead, going forward, I'm just going to enter some information about myself, the owner, because again, that's pretty much who they're making the loan to. Making up Social Security number. There's no additional owners at this time. If you had another owner on your business, you would add them in, answer a few questions about them. If you have multiple owners, that can be a good thing, especially if your credit's struggling, but your partner has really great credit. That's always a good sign. And then at this point, this is the credit authorization. This is where I understand now I'm completing this application. At this point, does your credit kit run? It was not pulled at any time prior to this. So you are able to complete that first page of the questionnaire on Fundera if you just want to get an idea of what your matches are. There's that ability. Like I said, you can take a few days, log in, log out. If you want to check in with your accountant to get some documents, check on some facts and figures. You can move at your own pace. And only at this point does your credit get pulled. So I submit. And you can see now I have submitted applications to 4 different lenders. These are the 4 lenders. And at this point, you're basically waiting to hear back from your lenders. And when you get an offer, it'll come through here on the site, and we'll also notify you by email and by phone. And when your offers come in, let's say you do happen to receive 4 offers from all these lenders, we'll work with you to make sure you understand who's offering you the best term. And the other benefit of the marketplace that I haven't brought up yet is that because lenders are competing for your business, you will often get lower rates coming in through us than going directly to the lender, because we've told people before, you know, we've got an offer 2 points lower than yours. Is there any way you can go below? And we often get back offers that are lower than the original ones.
So, question for you. At this point, you've pretty much just filled out information in an online form and told them, here's my income, here's all the information you need. I'm assuming they're going to either do one of 2 things. Either they're going to come back to us and say, hey, can you provide documentation, copies of tax returns, or are you now integrating with my accounting software such that you can pull that information for me?
So right here, we uploaded those documents that would verify the information.
Okay.
But we also do have an option for where you can integrate QuickBooks at the start of the application. You can find us on the App Center, or from a certain point in the application you can integrate, which I'll go ahead and lock out of this account. We actually integrate with both QuickBooks and Xero. But at this point in time, these only pre-fill some of the form. We don't pull in documents just yet, but that is actually something we're actively working on. We're with both QuickBooks in and of itself pulling the reports, and with Intuit account aggregation pulling in banking information.
Gotcha. So, because you uploaded financial statements, but I'm assuming, at least based on my experience and what has often been the case, is they're going to want copies of tax returns and things like that. Or did
Correct.
I miss it? Okay.
They're there. They were there.
They were, okay.
I can
I was
log back
busy.
in.
I was busy talking about my team SOB while you were doing that. I should have paid attention. Bad me.
Oh, it's fine. The nice thing is we can go back and see that. So these lenders, which the thing to keep in mind is short-term lenders require the least amount of documentation. They wanted 6 months business bank statements, your business tax return, interim profit and loss, interim balance sheet, and then other, again, is if there's anything specifically, the lenders come back to us and say, I think I'm going to need to see this before I can make a decision.
Gotcha.
So short-term loans are probably one of the most unique products to the online industry because they're loans that have daily payments, and they're usually over a span of no more than 2 years. They have relatively higher interest rates, but they tend to be good products for introductory borrowers. People are trying to build their credit, maybe at a high revenue point early on, need that capital to let's say, purchase some inventory to fill an order they have with PetSmart or something like that. And then we work with we have a lot of people that come back to us for a second or third loan, and we try to work with our borrowers to graduate them to better products. So then there's that benefit of coming back to Fundera because you also have the shopping experience yet again. Like, here I am, I have a business loan under my belt, helped my credit, helped prove that I'm a worthy borrower. Can I get better rates this second time around? And we try to, like, kind of, for people that start out in short-term loan products, our goal is to move them up to medium-term and then move them up to SBA, and then at that point, hopefully they're bankable. That's an ideal scenario. And
then Mariette wants to know if you can talk about the Fundera advisors.
Absolutely. I'm so glad you asked that. So we do have an advisor program, and something to note is that when we first launched our business, and we're still very young, we're about 1.5 years old, and we noticed early on that our best borrowers had their accountants involved in one way, shape, or form. And we would hear from these accountants, they would be sending us the tax returns or the docs, and they would say something like, it's so great to know of a place I can finally refer people when they tell me they need financing, because they were sending them to Wells Fargo or places like that, and their clients were walking away empty-handed. So we decided to build out an actual program to make the process of helping your clients easier. So that's how we built out the Fundera Advisor Program. So it's very easy to join. It's free to join. Let's just say ish. And I just want to show you the inside of the portal, which we're actually in the process of rebuilding, and we'll be premiering a new version of it at New Heights.
All right.
So,
and since you brought it up, what other? Where else are you going to be? You going to be at QuickBooks Connect this year?
So I will physically be at QuickBooks Connect. We aren't sure if we're going to have a booth there yet.
Okay.
And same goes for Sleater.
So you'll be like a mobile booth. It'll just You will be the booth.
I just really like to go for the parties. No, I'm just kidding.
Me too. Everybody knows how much I like to party. What about Sleater?
Same goes for Sleater. I will definitely be in attendance if you would like to find me and ask me questions. But I'm sure of the booth just yet. So we're still figuring out where we want to be physically this year. So this is our advisor portal. We've provided you information that makes the process of talking to your clients about financing or Fundera easy. Provides you some information on what businesses should I refer to Fundera. So we've given you some benchmarks. We also have some PDFs and some email templates you can use, whether you want to refer your client specifically to Fundera or you more want to white label the experience, as we like to call it. You know, it's a very hot topic right now, value-added services for your business, and access to capital is one of the most pressing challenges that a small business owner will ever face. So part of our program allows you to essentially add a loan preparation service to your business where you're able to complete applications on your client's behalf. So kind of jumping into that, there's 2 ways you can work with us. The first is we give you a simple referral link, which I'm sure everyone is very familiar with how those work. And the nice thing about the referral link is obviously we identify it as your client down the process. If they say, oh, I need something from my accountant, luckily we know who their accountant is, makes working together more seamless. But we do have a part of our program where we have a referral fee. So if you send a client to us who successfully funds, we can give you up to 1% of the loan amount. So if that's a $100,000 loan, that's $1,000. We do have some of our advisors who would rather not take the fee. They just want to recommend the product because they truly believe in it. And for those people, we can in fact then in turn give the fee to their clients. So we basically would send them a check to put towards their first few loan payments if that was the case. And then the second way you can work with Fundera is you can actually create applications on your client's behalf. And you can invite the client to the application at any point. It's the exact same experience we just went through. It just essentially allows you to complete what you can, upload documents, and then you can, in fact, invite your client, let's say, if there's a few questions you didn't know how to answer, and then the only thing your client will have to do is that credit authorization at the end. So that's our advisor program.
Great. And then as far as the loans themselves go, the interest rates on these loans, I assume it's just like any situation where you might get some fixed, some variable rates, or or is it kind of all fixed or all variable? What do you typically see?
So they're all fixed in terms of the actual structure of the interest.
Okay.
But what the rates are themselves is going to vary. Our lowest cost loan starts at about 6%, and we've seen upwards of 30 on a lot of this, and that's just as interest rate. When we calculate that to APR, it's even higher. So the lowest cost loans are going to be those SBA loans and the medium-term loans.
I see. And so are there ever situations where you could opt to, let's say, pledge your receivables as collateral against a loan to increase your chances?
Yes. We have a line of credit that is actually specifically backed by receivables, which is a really interesting product for businesses that have a lot of large receivables. So that's exactly what it is in and of its form. It's really interesting the way it works because your line sort of revolves around what the amount of your receivables are, and they're pulling from your QuickBooks when they do that. And then of course we do have the traditional invoice financing or factoring products. I mean, I guess it's not like Fundbox isn't necessarily what you think of as a traditional financing platform, but they're doing something similar there. And Bluevine is more much the traditional financing, and then we do have a few factoring companies for clients that like to go that route, where the factor is essentially collecting on the invoices.
Right. And then you're based in, you can turn your screen off if you want and go back to the camera.
Oh, yay.
Up to you. It's always nice to look at you instead of the screen when the time comes. So you're based in New York, right?
Correct.
So if somebody fails to pay, do two large Italian men show up at my door?
Absolutely.
Perfect.
No, so that's the interesting part about our business. I think Dennis asked this, like, are we a broker? And in a lot of ways, what we are is we're disrupting what brokers are. We actually have a very strong issue with brokers because the way that they do their business is they're baking their fees into the cost of the loan, and borrowers have no idea. They just think that they have a 37% interest. They're not realizing that 17% of it's going to the broker. So we're a broker who is combining software with superior customer service to obviously process applications quicker, but even more so is our business model, in that it's a completely free service. We make our money when somebody successfully funds, and the lender is paying us a fee equivalent to 1.5 to 3% of the loan amount.
Mm-hmm. Okay, so if someone does fail to pay, I assume the normal collection efforts would be put into place.
Correct. And obviously it's based on the terms of your agreement, so every lender is different. If you fail to pay your lender, though, we probably will not be helping you find another loan. Right,
of course.
We do help people refinance. If they've been put in a product that's way too expensive for them, we are able to help them shop for a lower cost loan they can use to refinance that.
And then, so, because obviously 30% is like, whoa, you wonder if it's worth even funding a loan at that rate. I guess if you really desperately need the money. But in a situation like that, are you able to, or would you consider looking at, let's say, factoring as an option for your clients? Or?
Yeah, absolutely. That's our job is to figure out what is the best possible solution for them. And that's why we let them kind of apply to that diversity of product. And I think something that is probably my most favorite thing about our business model is that we're just as apt to tell you not to take a loan as we are too. We've had people that have come through and they get back an offer that's astronomical, and they go, well, I have a friend of mine that was willing to give me a certain amount of money at this interest rate, and we'll say, no, you should do that. And in the end, obviously, we gain a customer in a different form, but that's really important to us. It's part of our mission. It's part of our business model to make sure that they're absolutely getting into the best possible option, unless it's just like there is not much of an option. Every option will sink their business.
And Gabriel just raised an excellent question in the chat. If as an advisor I sign my clients up for funding with Fundera and one of them fails to pay, does that impact my reputation with you? If, how does that work?
No. Obviously, the accountant will not be held accountable for that. And in terms of our working relationship, not at all. I imagine that you guys cannot be held responsible for people that are like that.
Right, but you wouldn't at a certain point say, hey, a lot of your clients are, defaulting on their loans. We can't take your referrals. Would that ever happen, or?
Well, we've yet to come up to that point. Okay. I would probably get nervous if like 3 of one person's referrals defaulted, right. And we would maybe have a singular conversation, but I'm hoping we'll never get to that point. Right.
Not that I'm planning on sending you like uncredit-worthy people, but I'm just, I'm curious. Gabriel asked the question.
I mean, it's a good question. I guess I feel like what's interesting is that what we find is accountant referrals are actually really high-quality borrowers, and one is obvious they can afford to pay accountant, and 2, their books tend to be in pretty great shape because they do have an accountant. So that's actually another reason we love working with accountants, is because their customers are great, and they come in, they're super prepared, the accountant is helping them out. So far, it's actually been the opposite. Our referrals have been stellar or awesome.
I'm sure. And so here comes my shameless plug, because if you have a client who ends up funding a loan with Fundera, and for that matter, if you just need the service, you can hire me as your CFO consultant, and I can do your cash flow projections, and we can factor in the loan with the effective interest table, so we take into account interest and principal repayment and the impact on your cash flow to make sure that you'll be able to repay the loan. So that's always available. Just call right now and wait. There's more.
Hey Seth.
Yes, sir.
Seth, I have a question. On the financial statements that are submitted to the bank, are they required to be blessed by a CPA as reviewed or compiled, or can you just print them off your QuickBooks or Zero file? The reason I'm asking is that in the state of Washington, the state board has made it very unattractive for CPAs to do reviewed or compiled statements because they have to participate in this peer review program, which is kind of a pain in the ass.
Yeah.
So.
No, they do. To answer your question, no, because the only times we're working with banks is on SBA loans, and the SBA loan structure application is very different. We actually get that question quite a bit because we have a lot of people who are used to working with our clients on bank loans, but that's not the case here. So we have a lot of people who go through the loan application and aren't involving their CPA, or don't have a CPA.
All right, so we have we're coming up on 10 minutes left in the hour. So for those of you kids watching from home, make sure you post your questions right there on the feed on the Google Plus page. For those of you here on the live panel, if you're not talking, please mute so that we eliminate the echo as much as possible. And great questions, though. Great demonstration so far. Sarah asked if somebody, I guess somebody actually took me seriously. She wants to know if somebody wants to hire me for the cash flow projections, how do they do that? If you just go to schoolofanswers.com, we have schoolofbookkeeping.com, and then there's schoolofanswers.com. That's where people can go to sign up for one-on-one with me, and I can either teach you how to do it for you, whatever you like. So I'm glad I made that shameless plug. So anybody else have any questions?
I do. I asked it in the chat a little bit earlier. What if someone took on a personal loan and they want to convert it to a business loan, and they're having problems with lenders accepting that because their credit score is skewed, but they have documentation for that? How does it work with Fundera?
So refinancing a personal loan to a business loan is going to be very hard. It's basically, it's not something that I know of being able to do. The only way that, like, possible situation I could see it applying is if they're a sole prop. But I don't even know what that would look like.
I mean, if you take on, you can't get credit for the business because it's like either too new or something, and they've taken on a personal loan just strictly for the business. That's kind of where I'm seeing this
that happen a lot. We actually get asked that question a lot, like, well, I haven't qualified for a business loan, but I qualified for a Prosper loan or something like that.
Yeah.
And a lot of times that happens when people are really young. And unfortunately, it's hard to do because the lien is on you, the loan is on you, and so it's hard for people to switch that. But to be honest, that's actually that's a question that I've never been asked formally. So I'd love to actually talk with just to verify with one of our success team members on that, because there may be like one lender that does that I'm just unaware of.
Okay.
And I can email you because that's actually a really good question and something I'm really interested in knowing myself. Makes for a good blog article.
I see it both with personal.
I may have another one for you. So here's another funding option that I've seen that's interesting, that I've actually taken advantage of myself, is, for example, through PayPal. You can get these working capital loans. And they just do it based on, because they're tied directly into your income stream, they just deduct a portion of every payment you receive when you process payments through them to repay it. And the way they structure their financing is the fee, they just charge you a fee. It's not really an interest rate per se. Of course, you can figure the effective rate. But basically, they charge you one fee so that you borrow $10,000 and you repay them, $10,900, whatever it is. Do you guys have that within your mix of options as far as, loan funding options?
So we don't have PayPal, and Square is doing it too. I feel like someone else recently came out and said they were going to do it. I can't remember who.
And most of your traditional credit card processing solutions offer it too. They usually kind of charge a lot for it. PayPal's is pretty reasonable. That's why I did it. It was like, okay, I'll take the extra $10,000 for $900. Or, I mean, when I saw what they were going to charge me and I know the flow and how quickly it's going to get paid off, I was like, that's a no-brainer. Sure, give me the $10,000, stick it in my account, I'll use it. I think those programs have done really well. Like, I think both are very young and they've lent a lot. So we don't offer those. But that being said, our platform's ever changing, and we're bringing on new lenders every day. We really one day would like to sort of even help the banks get online, put them into the mix, because our end goal for our company is to literally be the most overarching view of your financing options from end to end. And we've only just begun, so hopefully is the answer there. Great. Okay. Anything else? We still have a good 8 minutes left. So folks, this is your chance. This is your chance to learn. Or Meredith, maybe we can shift gears back to kind of where we started. What else, in your experience, what are the major gaps in your experience that business owners or even accountants who advise business owners have in their understanding about loans and lending? And, I'm sure a lot of people are probably afraid to even apply for a loan because they figure they're just not going to get it. And it's going to ding their credit, so they're going to lower their credit score, and they're not going to get the loan anyway. What do you say to somebody who's got those concerns?
I get it. I feel like, kind of to add to that, like, why apply for something if I don't even stand a chance? And more that idea of, and waste my time, which I just think about. I say this all the time, and I stand by it. There is nothing that's more valuable to a business owner. And so I think that's what I love about our business model, because when you reach that match page, you should have an idea of if it is even worth your time. And when I say the match page, I mean that page where you saw all the different products. Because we have a lot of people that don't match. And we refer them to a few personal loan options, which I know we just touched on. And we try to keep in touch with them and kind of identify them on when options could become available. But I think that in a lot of ways, Fundera helps with that whole mindset. Because after the match page, if you get on the phone with us, you let us ask those questions to you that give us a pretty good idea of where you stand, I feel like it should give them a vote of confidence of, yes, we can help you, or no, we can't. And granted, always take it with a grain of salt. This is not a black and white industry. We might say we think you have a good chance, but you didn't tell us you just had a bankruptcy and you're only a year out. And so I would say that you have to evaluate how important this is for your business. Because if you've got Whole Foods wanting to put your product in their stores and it could change your business, it's worth it. It's worth the time, at least to try it. It's worth the ding on your credit score, because that's make or break for businesses, and you don't want to miss out on those large opportunities because you were afraid. And I think that's what I love about working at Fundera, is I really do feel like we provide that flashlight into the options without you having to give in too much time or take that credit ding at first.
Right. And, you know, it's interesting. One of the most probably sage pieces of advice that I recall receiving over the years is from a client of mine who became a really good friend. He's built and run and sold several successful businesses. And one of the things that he said to me one day just has always stood out to me. He said to me, Seth, the key to succeeding in a business is to make sure you always have access to cash when you need it. Because like you just said, you never know when that opportunity is going to show up at your door that you're going to need to be ready to and have access to the cash to fund it, right? Yeah, I watch Shark Tank, and all the time I see these people are coming on, and a lot of the times the reason they're looking for that investment from Shark Tank is because they need the cash to be able to fulfill orders, right? So it's because their businesses have gotten so successful so quickly that they don't have the money to fund and deliver on the orders that people are asking them to fulfill on. So I think, and that brings up a question, I think, which is an important one, because you mentioned earlier, Meredith, about building your sort of credit score for the business. And I know that on the personal side, a lot of times we say to people, especially like young kids out of college or going into college, that it's good to get loans like car loans and things to build credit. Would you say the same is true for a business, to the point where even if I have funding and I don't perceive a need for having a loan, should I do it anyway to build up credit for the business? Or if I'm personally guaranteeing them anyway, as long as my personal credit's good, does it matter? What do you say?
Okay, I actually am so glad you asked this question. The personal credit score, for the most part, I feel like only matters for medium-sized businesses and up, because at least every lender on our platform, which is anybody but a bank, they're only looking at your personal credit score. The only lender where that may not be the case is the SBA, because sometimes FICO has this new small business score, and sometimes they'll look at that. But that being said, I don't think it's ever a bad thing to have business credit. I know business credit is really valuable in trade credit. And if you really do want to grow your business at one point in time, it will become important. But I think if you wanted to put a focus, like you said, getting out those loans, building the credit, I would really focus on your personal credit score, understanding the metrics that influence it the most. Like FICO does a really good job. They've got a pie chart. 35% is payment history, 35% or 30% is credit optimization, that sort of thing. Understanding the metrics, and like you said, maybe having some credit cards. But I do think it's valuable to have a business credit card, absolutely have a business bank account. If you do not have a business bank account, get one, and those sorts of things. So prioritize it, but always prioritize your personal credit score first. Okay,
so just to reiterate, and I think it underscores Gabriel's question in the chat, which is what is the best way to build your business credit without getting a loan? Obviously, having the business bank account is going to be one. What other suggestions do you have that people do, let's say, before they can even qualify for a business loan? What should they do to get closer to that point?
So from a business credit perspective, I think one of the most valuable ways to build the score is with trade credit relationships. But you want to work with somebody that you know is reporting to the agencies. Some givens are going to be the bigger guys like Staples, Office Max, so maybe you have an account there and you pay from an invoice structure. Or if you work in a very like trade-heavy industry, I'm sure there are some main players that do as well, and I would ask that before doing business with anybody. So that's the main way. Business credit is another. It is still good. Your business loan will count kind of both for personal credit and business credit, so that's good. Then for your personal credit account, the thing that's going to matter the most is do you pay on time? And I think that if you have credit cards, are you utilizing them? Maybe you're one of those people that doesn't really like credit. You just sort of have a credit card for emergencies. Start putting a couple Starbucks on it a month, and then just paying it off to show people that you have that structure. And then just to jump back really quick to business credit, I think the one thing that's most interesting about business credit that isn't applicable to personal credit is that with business credit, your score actually goes up if you pay early. So if you've got an invoice that has net 60, but you pay it, let's say, in 30 days, that actually matters versus just if you pay on time. So again, if you are working with someone on trade credit, they're invoicing you, you actively pay on time. Don't just pay on time, pay early.
And in fact, on that point, and we'll end on this note, one more thing I'll mention before we go. I just recently, on behalf of a business, set up a scenario with, where they have AT&T for their phone bill, and I was able to go on the AT&T's website, and I'm sure you can do this with a lot of these other vendors that Meredith is talking about, where it will help with your business credit. But you can go online, you can set up auto pay, but I was able to say automatically, take the money out of my bank account to pay off this bill every month in the exact amount that's due. like on the day after the statement is issued, so long before the due date. So I'm sure you can automate a lot of this stuff too, which is what I'm all about, of course, so you don't have to worry about it.
No.
Okay, and then last but not least, again, for those of you who tuned in late, it is Meredith's birthday. I think it's advisable against singing happy birthday in the Hangout format. I'm not sure how that's going to go. I've not heard the group here sing before, but when you consider that and the echo and everything else that could potentially go wrong, I'm thinking not, unless Meredith, if you want us to, we will. I can't.
I'm okay. I appreciate the sentiment.
But you know what we can do? Hold on real quick before we go, because there is something we can do in honor of your birthday, and I'd like to do it here. Just give me 1 second. Oh, there, of course, leave it to Mariette. Okay, so here we go. Here it is. All right, blow the candle out, Meredith.
I was trying to put on a birthday hat, but it wouldn't let me.
Okay.
Happy birthday, Meredith!
There we go. Okay, don't forget, Gina's Hangout today is at 2:30 Pacific, 5:30 Eastern. Gina, what are we talking about today? And also, before you answer that, Gina, when are you having Meredith on your Hangout?
Meredith will be at my Hangout on June 19th, 2 weeks from now. So looking forward to it. Today is you get what you get.
I love it.
We may have Justin James come on, actually, talk a little bit about all the happenings at ZeroCon.
That'd be nice.
Excellent. All right, Meredith, thank you so much for being with us today. Got to cut it short here because I've got a one-on-one session coming up right now. And we're going to be rolling out a course on Fundera at schoolofbookkeeping.com, so look for that. We'll be in production on that in July, next month.
Bye. Thank you guys for having me.
Take it
See
easy.
you guys later.
Bye.